Hey guys, how's it going? Value Venture Investing here today. So yes, it's true. This isn't clickbait. I actually sold Apple, probably the biggest Apple bull out there. I've held the stock for over 10 years and not sold any of it. And a couple days ago here, I actually sold Apple shares. So in this video, I'm going to go over the 4 reasons that I sold it. So be sure to stick by and watch this because there's some very important lessons in this. And at the end, I'm actually going to reveal how much I sold of it. The dollar amount and the percentage of it that was in my portfolio. So stay tuned for that. So the first reason I sold Apple, and this is probably the most obvious reason, is the run. What a historic run we've had this year. Year to date, it's been up like 70 something percent. So I decided to go back 10 years. I mean, I know this is a pretty small amount of time, but since I've held it for 10 years and I've been watching it very intently for 10 years, I thought we'd look at the returns every year. Now, of course, this is hardly scientific, doesn't mean what's going to happen in the past is going to happen in the future, but is one of the criteria that I use to sell off some of my Apple. So taking a look at the charts here, we can see in 2010, I mean, the returns have been astronomically great for Apple anyway, but in 2010, we saw about 54% gain in Apple. Heading into 2011, it was about 25.6. Now these are approximate numbers from the 1st of January to December 30th. 2012, we saw about 25.8%. 2013, it was not as great. It was about 4.2%. And then looking at 2014, we're over 40%, about 40.4%. 2015 wasn't a great year. We saw a loss of about 2.8%. And then in 2016, it was basically what the market had as a whole, on average of 10% in 2016. 2017, we saw almost 50%, 46.1%. And then in 2018, that was a year that things started turning sour, especially in January of this year. And we saw a negative 7.7% drop. And of course, this year, here's the exact number, as of about today, we're up about 77.7%. So almost 78% gain 1 year. So the average gain for the past 10 years was about 21.7% if you average all those numbers. So we're over triple that this year. Again, that doesn't necessarily mean anything. However, if history is any indication with Apple, when it runs, it tends to pull back, and things might be different this time. But I've held Apple for a long time, and it always pulls back for very irrational reasons, like we saw at the beginning of this year. And this was one of the quickest rises that that I've ever seen. It could have before 10 years or something like that, but it's incredibly quick. So it always pulls back. So I want to be there for that possibility to potentially get back in. What is the reason that it's running up so much? Well, in my opinion, one of the reasons is that Apple's kind of becoming revalued as a services company. And I talked about this in a lot of my other videos. I said, I wonder if the market's going to start to realize this or not, and reward it with a higher multiple, or a multiple that's even close to its peers, like Facebook. Like if Apple was the same multiple of Facebook, it'd be like $370 per share, right? And I think Apple's got a lot more ahead of it than Facebook. Personally, I am a Facebook shareholder as well. So I think that's one of the reasons that the stock has run so much. However, I think that this rollout of services is growing massively in terms of, the iTunes Store, iTunes, Apple Music, all those other services. But I think a lot of emphasis is being put on Apple TV competing in the streaming wars. And I think this has been a really slow rollout. And I think maybe there might be some disappointment in there as well. So we've seen this epic run up, and I think there might be a little bit of disappointment. And like I said in my other videos to you guys, I think this is going to take a while to really accumulate because they're just slowly releasing, and there's a lot of competition. So it's a little bit of my fear that is what's baked into the stock. So that was my number 1 reason. So number 2 reason, we don't talk about politics too much on here, but uncertainty with trade. Of course, I sold this before it seems like the phase 1 trade deal has been finalized, and of course things that just went up again. Apple's at like $280 per share right now. I sold a little bit lower. You can never get it perfect. So of course I did this before the news, but my thinking was, if this falls through or the tariffs come on, we're seeing it so high right now, it'll probably pull back. And even more than that is if it pulls back and then we go into next year with the election, I think Trump's probably going to get in. But if we see somebody like Elizabeth Warren or somebody get in, maybe specifically her, we could see havoc in the stock market. And I would like to have some cash on hand for that, and I wouldn't like to have such a high proportion of my portfolio in Apple. So that goes into reason number 3. Reason number 3 is my high percentage in Apple. At one time I had like 60 to 70% of my entire portfolio in Apple. Don't do that. I mean, it's worked out great because the company was just so ridiculously over or undervalued. Like I've said to you guys in my other videos, it was just stupid. I mean, and of course it's obviously come up a lot since then, but that's why it's such a high, percentage. And I think I know Apple very well. So that's why I have a high percent in there, but it's still a dangerous move. So I wanted to claw that back a little bit. And that kind of ties into another video that I made a while back. I don't know if you guys saw it, about why most investors and traders lose money, is that you don't fall in love with stock. And maybe I'd fallen in love with the stock a little bit too much. And I want to have more cash in my portfolio to deploy in different areas, because there's been other opportunities that I've missed out because I haven't had that much cash, or I haven't had any cash. So while I think that there's a lot of room ahead of Apple, there might be some other picks that have a higher probability of gaining significantly more than Apple, and that plays into don't fall in love with the stock. Now, the 4th reason that I got out to it is the metrics. So let's take a look right here at the metrics of Apple. These are just very brief ones, of course. We're trading at a little over $280 per share right now. And we have a market cap of 1.27 trillion. So we've, of course, breached the $1 trillion market cap. And that doesn't really seem to, maybe more of a support than a resistance now. The trailing PE is getting high historically for Apple, even though it's ridiculously low for this company, in my opinion. And of course, the forward PE is 18.79, which is, it's really, I think, pretty in line for Apple. So, but we've also seen that forward PE a lot lower. So that's something to think about as well. So of course, all the other metrics in Apple have stayed relatively intact. Phenomenal balance sheet, phenomenal income statement. Of course, we've seen cash balances go down because they're buying back so many shares and they're upping their dividend all the time, and they're just taking on more debt, of course, rather than repatriating some of their cash. So that's all well and good, but of course we've seen the metrics on the higher end now that we've seen it come up a lot as well. So now I'm going to tell you guys exactly what I did. So here's a screenshot right here of the execution I had the other day. It was 11,000 something dollars, so that's in US dollars. So in Canadian, it's around $15,000. So that gives me a little bit of cash to play with. I'm really cash heavy right now, comparatively speaking to myself in the past. So to give you some more perspective on this, of course, I'm very bullish on Apple still. This is less than 20% of my portfolio in Apple. So as you can tell, I probably wanted to get a little bit of cash because this was nearing, in Canadian dollars, a six-figure position that I hold in Apple. So to take a little bit off the table, less than 20%, I thought was reasonable at these very high levels. And perhaps if you have a very high percentage of your portfolio in Apple as well, you might think of doing something similar. Of course, this is just an educational channel. I mean, do what you want, but obviously I think the stock is going to do phenomenal in the future, and next year we might even see it run into 300 or a little bit over 300, and definitely would be deserving of that. The question or not is whether it's going to, because Apple always seems to get what it's not, seems to not get what it deserves, rather. So that was the reason I pulled, one of the biggest reasons I pulled a little bit off the table. I'd like to know what you guys think about this as well. Maybe specifically about your mindset. Like, it's really tough. This was a real big challenge for me. Like, I think Apple's still really undervalued at $270, $280 per share. But my experience and some of the the investing philosophies that I live by state that I should sell it. So what are your guys' thoughts on that? Would you have held on? Are you still holding on? Love to hear down below in the comments. Don't forget to like, guys. Subscribe really helps out the channel so I can make more videos for you guys. And that's going to be it for today, guys, and I'll see you in the next one.